What's up, everybody? We'll go ahead and get started here in just a moment. But as always, we will do the quick audio and visual check. Also, if you guys can rewind the broadcast, just let me know. We'll get started here in a moment. We're sitting right here outside of Hudson Yards. Just off to the right, I believe they're playing a basketball game. Not too sure who's playing. Looks to be the Boston Celtics, Dallas Mavericks. Get started here in a moment. Everybody, I think we can go ahead and get started. It is going to be a little bit windy, just want to forewarn you of that. So I apologize in advance. Today is June 17th, 2024. It's about 9:03 p.m. Eastern Time, and we are reporting live right here from New York City's Hudson Yards. They set up a big screen right here outside of the Vessel, where you can watch the NBA playoffs with the Dallas Mavericks and the Boston Celtics. You can see everybody's pulling up chairs to watch the game. Now, the big building right in front of us is the Equinox Hotel. It's an absolutely beautiful night. And just off to the right, you can see the Vessel. Pretty lively neighborhood, pretty lively area. Beautiful, beautiful night. So we'll go ahead and dive right into the live stream. We do have some breaking news for today. Another brand new all-time record high for the S&P 500. The S&P closed up just over 40 points, 41.5 to be exact, closing at 5,473, a brand new all-time record high, just up under 1% on the day. Now, this is the 30th all-time record high of 2024. So the market goes on to continue higher, defying the odds and climbing that wall of worry. But it's not just the S&P 500, it was also the NDX, which is the NASDAQ 100, that was up over 1% on the day for about 242 points. The NASDAQ 100 closed at 19,902 for the first time in U.S. history. Over 30 new all-time record highs for the NASDAQ 100 this year. So U.S. equities are performing really, really well. Absolutely fantastic. Now, this is going to be a big week coming up ahead on Wall Street for home builders. Now, we briefly talked about this yesterday, but it's going to be pretty busy, not only for economic data as it relates to the housing market, but also for home builders in general as they report corporate earnings. We have Lennar, which is ticker symbol LEN, which actually reported, I believe, today after the bell. KB Home, ticker symbol KBH, is going to be reporting earnings tomorrow, Tuesday, after the bell. Yeah, you can take it. Sure. No worries. Yeah. Have a good day. Now, if you want to look at the home builder index as a whole, we can go over to, if my internet would work. Hold on 1 second. Okay, we're back up and running. If you look at the ETF for the Spiders home builder, ticker symbol XHB, trading at 52-week highs and just shy from a brand new all-time record high. If you zoom out on the weekly, this would load. The home builder index hit a new all-time record high back in April 1st to be exact. We've been consolidating here, but I think with this newfound earnings season with the home builders, I think we should be able to push through all-time record highs for the home builder ETFs. Last but not least, we'll check ticker symbol CL, which is crude oil futures. Crude oil. Now, with that being said, I'm going to go ahead and close up the laptop. We'll go ahead and get the stream started. Once again, we are starting off the live broadcast right here in the Hudson Yards neighborhood of New York City. Right. It's a beautiful, beautiful night. Let's walk to the back so I can show you guys the view here. Let me see if I can adjust the brightness. So this is kind of cool. They have the NBA playoffs set up right here at the Hudson Yards. And right in front of us is the vessel. Pretty cool, right? And since it's 9 o'clock, it's the summertime. The sun is just setting over the Hudson River. This is looking out towards the Jacob Javits Center, as well as the West Side Yard, and of course New Jersey. This is kind of like an outdoor dining place. You can get a couple of drinks, some light food, but I love it over here. It's beautiful, and yeah, Dario, you're right, it is extremely windy. Now you can imagine, I always say this, Hudson Yards is beautiful, but it's extremely windy, and in the winter it's pretty much not livable, in my view. Now there's so many beautiful condominiums and hotels being built on the west side, but the winter is just too brutal, in my opinion, to be able to walk over here every day. It's just, you know, gale force winds, freezing, raining, cloudy, miserable. But in the summer it's quite nice. It's hot out, so with the wind it feels nice, but definitely not the same story in the winter. So let's see who we have in the audience. Maybe we'll try to go on the Highline tonight. Hey Arturo, good to see you from Argentina. MG, thanks for joining us. Now the Hudson Yards also has a lot of these brand new Class A office towers. We've been talking about the looming commercial real estate crisis in New York City. There's a lot of older Class B and Class C office towers that are probably going to be going into foreclosure and being sold at auction for pennies on the dollar. But you can't really say the same thing about, you know, the newer Class A towers that are going up, not only at Hudson Yards, but Right on Park Avenue too. You have 425 Park, which is the temporary headquarters of Citadel. You have the brand new 270 Park Avenue, which is pretty much almost finished. It's going to be the brand new JP Morgan Chase office tower. And then last but not least, you have 350 Park, which is going to be kind of a project with Ken Griffin of Citadel and Vornado. And those are leasing pretty well. 425 Park is commanding very, very aggressive price per square foot. It's just a little bit of a bifurcated market. Since everybody's returning back to the office, it's going to be very difficult to get your employees back to the office in a 1980s style cubicle. It's just not going to work out. You're going to need some newer and better products. Hey, what's up, Alan? Good to see you. New England Crypto is here. Mark Summers, Jeff W277. Good to see everybody. Trust everyone had a good day. As I was saying earlier, this is the 30th consecutive record high for the S&P 500 today, closing at new records, and the NASDAQ 100 as well. If you remember from earlier in the year, we were talking about historical stock market performance during election years. And I wrote an article about this, kind of giving a line item breakdown through every single market cycle and every single presidential election we've ever had in history. And it turns out that the market performs the best, or I should say the market performs very well during presidential election years, but it performs the best during presidential election years when we have a current president that is up for re-election. And it looks like history is repeating itself. You do oftentimes see volatility into the election itself in November, and after, you tend to have a really robust, what they call Santa Claus rally into the end of the year. And I'm fully expecting that to happen this year too. Lena Sandoval, what's up? Tyler St. Clair says, I remember hearing that they closed down the tower due to accidents. Oh, you're talking about the vessel? Yes. So the vessel which we just passed is now closed to the public, but the good news is it's being opened again to the public. They just have to put up some safety precautions and procedures, and they should be back on track. It is a little bit windy. Hopefully the audio is not super horrible tonight. It actually wasn't windy all day, and the wind just started to pick up. This is the Highline. I haven't taken you guys up here in a really, really long time, but it's beautiful. It is really, really beautiful up here, although it is quite windy. And it closes at 10 p.m. So maybe we'll have a quick walk around. We'll check out the Highline near Hudson Yards, and we'll try to make our way down to Chelsea if possible. What do you guys think? It's quite peaceful up here, particularly if you come at sunset. This building, you'll notice, is on wheels. This is called the Shed, and it moves. It can retract. It can go all the way out, and it can be sucked in. You can see there's a lot of camera equipment, audio equipment there. And during the summer, they have a lot of outdoor activities. It's a very futuristic and very cool looking building. Hey, Mary's here, what's up? Yeah, it's really nice. And all along the Highline are brand new developments. These are condos both for sale and rentals. And I'm telling you, just 5 years ago, the west side of Manhattan, Hudson Yards looked absolutely nothing like this. These are all luxury condos going up. Really great views. The only thing, again, as you live on Hudson River, it's very windy here. And in the winter, it's not a fun time living over here, in just my opinion. But it's interesting to see how the neighborhood has changed so much. It's almost like a city in and of itself. The Hudson Yards is kind of how I can describe it. Now, here's the shed. Notice the shape, and notice the shape over here. So it can come all the way back into here, which is just wild to really think about. I'll also show you guys the brand new Moynihan Highline extension. This was a $50 million project that opened last summer, and it connects the Whole Foods all the way around to here. This will wrap you obviously to 50 Hudson Yards, where the new corporate headquarters of BlackRock is. Yeah, Brad, I saw that. It says, hey Tom, how about the market today? Plus my Palantir might be breaking out. Also got rid of some Kava calls. Still in the stock too. Yeah, I saw that. Well, yeah, number one, I mean, S&P 500 and the NASDAQ 100 rocking into new highs. The 30th new record high for the S&P 500 this year. But I did see that. I'm not in Palantir. But if that breaks into new highs, I'll be gassing that all the way into the record high. It just doesn't have the earnings growth for me. It doesn't have the sales growth as it relates to some of the other stocks in the market, but it's building out a base. Palantir is building out a base, not liking the overhead supply, so I'd rather buy that into new highs than buy it right now, but I hope you make a fortune on it. But yeah, relatively good day for the market. This week is going to be dominated by home builders. I believe today, it was either KB Home reported earnings after the bell, or it was Lennar. But we're also going to get a lot of just residential real estate sales data in general coming out. We're going to get existing home sales this week. We're also going to get building permits, which is a very good leading economic indicator. We often talk about how we can use different economic indicators to help us, for lack of a better word, predict US GDP growth, if you will. So I want to make a quick pit stop by the brand new Moynihan extension, but then I want to double back and take you guys to that Zaha Hadid development. But look at how nice this looks, this outdoor dining area. The Highline will take you all the way to Chelsea Market. Look at this. There's all different art along the Highline. Now, just in time for summer, we were kind of talking about commodities during the intro, and crude oil is trying to climb its way back into the 80s. I think we closed at $79 a barrel today for crude oil. And there was a really good article this weekend in Investors Business Daily covering a topic we talk about quite often, which is gross S&P 500 gross margins expanding into this. Oh, hey, good to see you. Thanks so much for watching. That's a nice guy. Which is S&P 500 gross margin expanding into this age of AI, if you will, right? There's been many reports, like McKinsey reports. I think Deloitte has had some come out that says gross margin could be expanded across the board by 8 to 10% for S&P companies. You know, just think about what that'll do for earnings growth. This is looking downtown. See some of the cars coming up. Zozo Bob, it's always good to see you. Thanks for joining us. Yeah, SBK1 says, Tom, do I remember that accident over here around Thanksgiving? I do. I think it was directly under where we are right now. Look at how cool this view is. You're looking over the Empire State Building. And it's green. I think it's green for that television show that's coming out that has to do with the Game of Thrones. Hey, what's up, Tom? Good to see you, Tom Barry. Look at the edge, too. Neighbor Bob says, Tom, existing home sales are at a 50-year low. What are your thoughts? I think it'll probably continue to be quite lackluster. I think the only sales that are really getting done that I'm seeing are new development. And that's because developers, or sponsors as they're called here in New York City, have more tools at their disposal to kind of get deals done. And, you know, if you think about the last 12 years or so, we've been living in this decade of ZIRP, or zero interest rate policy. So everybody, most everybody, right, I'm being a generalist here, that has, well, that owns a home and has debt on it or has a mortgage, probably is, you know, paying less than 4%. You know, many of you, I think, posted in the chat that your 30-year fixed rate mortgage is under 3%, right? So not a lot of people are gonna wanna give that up. So people aren't selling. And if people can't get the price that they want for their home, well, they don't really need to sell because they have a lot of equity. They can manage the payment because the interest rate is so low. And even if they can sell, people are like, you know what, I'm just gonna have to go right back out into this market, which is still pretty tight. And if I need to take on debt, well, I'm gonna be paying, you know, 200 or 300 basis points more. So the market is really, generally speaking, residential real estate is, in terms of transaction volume, is very, very slow. You know, if you think about how many deals were getting done in 2021, it was insane. You know, you had these bidding wars, people paying well over list price or well over asking price for homes, and pretty much like clockwork, right, with the 6 month lag. I want to show you guys this paddleball court here. This is the Hudson Yards paddle. Once the Federal Reserve started to transition away from QE, or quantitative easing, to quantitative tightening, right, in two ways. Obviously, number one, they've raised the Fed funds rate from 0 to 5.25% to 5.5%, where that stands right now. But also, what most people don't follow, you also have to look at the Federal Reserve's balance sheet, which kind of, I should say, is the main liquidity mechanism, right? So the Fed, another way they could stimulate is they could go into the market and purchase mortgage-backed securities and U.S. Treasuries, right? And if you go to the St. Louis Fed website, I think I have some links in the Nightbot and also in the newsletter, but go to the St. Louis Federal Reserve website and look at the Fed balance sheet in real time. And it's been rolling over quite aggressively because they've all but pretty much halted their bond buying program, which also is could potentially put some pressure to the downside on rates, because you have to think about the correlation between bond prices and interest rates, right? As bond prices are being bid up, interest rates go down. But as bonds are selling off, right, as the Fed lets these bonds roll off the balance sheet, that can put the inverse pressure on rates, which could actually make them go up. So I think you have a dichotomy between, there's so much existing debt outstanding at fixed low interest rates, and we've done a complete 180 where now money is very expensive relative to where it was just 3 or 4 years ago, and people aren't buying homes, and also people aren't really selling, generally speaking. Now this is another beautiful shot. We are now officially on the Moynihan connector extension. I don't believe I've brought you up here before, but I love it. All the greenery is grown in now. You see a lot of trees. You can sit down here on the bench and you're overlooking the connection to the Whole Foods. What do you guys think? This cost the city $50 million, this thing that we're sitting on right here. Hey, Joseph Hardaway, what's going on? Good to see you. Here's a better perspective of what the connector bridge looks like. Hey, Shannon, what's going on? Thanks so much for joining us. Jimmy B's, his ranch in Bergen County, New Jersey, just sold for $957,000, $110K over ask, a cash deal, and 6 days on the market. That's another thing. The vast majority of deals or transactions have been cash, not really any financing. Now, I think in this building that's right in front of us, that's the Real Deal office. They're like a publication for real estate. And I think the Real Deal offices are right there. But yeah, you're right. You know, I'll say this, if it's good product and it's priced right, it's gonna move, regardless. But I think there's a lot of deals that you can get right now in new development, in my view. Particularly, and we kind of, if you were listening on last night's broadcast, I gave a little bit of a tip. If you're looking to purchase in a new building or new development, right, which means you're not purchasing a resale, you're gonna be buying from a sponsor. One of the things that I recommend that you do is really get to know the developer, do your due diligence on who built the building, you know, who owns the debt, you know, what are the partners involved, and then go do some research on what their other projects are and what percentage of units sold they're at. Because if you see something that you like, but the developer is on, you know, 3 or 4 other projects and they're not selling that well, they're probably going to be very, very motivated to get a deal done. And you could probably ask for the world, right? You could ask for the sponsor to pay the transfer taxes. You could ask for the sponsor to pay the mansion tax, you know, hammer them down on the price, and you can negotiate pretty hard if their other product isn't moving well. So that's kind of something I always advise. So get to know all the developers, the big name developers, know which product or which inventory is selling, which inventory is not selling, and also why is it and why is it not selling as well. So this is I should say the end of the brand new Moynihan connection. And this takes you right here to the Whole Foods. So we pretty much just made that big L shape all the way from the Hudson Yards, or I should say back where the vessel was, the shops at Hudson Yards, around the Moynihan connector bridge. And now we're right here at the main Whole Foods. So they really did a good job. Everything is all interconnected. This is all public outdoor space that you can use at your disposal. And you never have to walk on the street, so you don't have to deal with street traffic. I think they did a really good job here. Yeah, I think I was right. This is the Real Deal. So if you ever read any of the Real Deal articles, which I think they're a pretty good publication, I like it a lot. This is their corporate headquarters in New York City. Great location for it, by the way. Hey, Gene S. has loved the view of the connector bridge. Oops. How is it during the winter? It's cold over here. Not a big fan of the Hudson Yards in the winter, but I just want to take you all to the very end of this. Hey, FredX, what's going on? I trust everything is well in Alaska. Hope you had a really good Father's Day weekend. All right, so this is the paddle. Pretty cool, right? Maria says, where is this located? This is Hudson Yards, but exactly 31st Street and 10th Avenue, I believe this is. This is the main Hudson Yards development. And this is overlooking where we just were. Right under that bridge is where we saw that crazy crash during Thanksgiving 2 years ago. And this is looking up towards the main entrance to the shops at Hudson Yards and the new headquarters of BlackRock. See these people trying to get something from the food cart there. Alright, we'll head back. I thought I would just show you because we haven't come here in a long time. Hopefully you guys enjoyed that. If you're visiting New York City, I would highly recommend at least just take a trip during the day. It's beautiful here. Hey, Norma Miranda, what's up? Thanks for joining us as we kind of mosey through the Hudson Yards on this historic day for the US. 30th all-time record high for the S&P. So we'll go to the end here and then we'll make this left. And then we'll make another right. And we'll walk past the Moynihan Train Hall. And I want to go all the way to 5th Avenue so we could really see the that dragon that's on top of the thing. I know, right? Ken Brockton says that Thanksgiving crash scene was epic. It was wild, man. Wild stuff. Yeah, inarguably the best episode of Walks on Wall Street ever, for sure. Yeah, we've had some crazy episodes here. That's the thing about being live in New York, you know? Anything can happen. Right when we make this right, you're going to see two distinct buildings. One is going to be 1 Manhattan West and 2 Manhattan West. These are probably the most recognizable buildings in the Hudson Yards skyline. And you'll have this perfectly placed view of the Empire State Building. Isn't that pretty cool? Now, when I point the camera up, you're going to see these two big kind of twin towers. That's 1 and 2 Manhattan West. Hey, Peter, what's going on? Thanks for joining us. Yeah, and you know, another interesting thing is it really tells an interesting tale about the specific sectors that are outperforming. And this is why, you know, we kind of hammer on this topic all the time about it's important to really drill down into sector focus, because the general market could be doing really well, and if you're an individual stock picker and you're not in those leading sectors, well, you're not going to be feeling too well, because it could be a banner year, a record year for the market. You know, semiconductors, enterprise software, home builders could be totally outperforming. But if you're in a sector that's, you know, lackluster, you're not going to participate in any of those gains. And I think that's really kind of, it shows its face specifically with the Dow. I think the Dow 30 is only up 2.5% for the entire year. I believe the S&P 500 after today's close is up over 18% for the year. So if you look at the breakdown, it's a really good website to kind of see this visually. If you go to slickcharts.com, once again, slickcharts.com, it does a really good job of giving you a breakdown of how these indices, not only are they weighted, but what are the individual components of these indices. And obviously S&P 500, the top 10 stocks in the S&P, an overwhelming majority are, tech-based. You have giants like Nvidia, Apple, Amazon, Microsoft, right? But for the NASDAQ 100, you get even harsher concentration into this high beta tech view. Look at this Peloton here. Now, I'm actually honestly surprised that Peloton can even afford this lease here at Hudson Yards. Not trying to be negative, but I think this company is probably going to go under. Peloton was one of those stocks that was a COVID darling, if anybody remembers it. If you look at the ticker PTON, Peloton, that was one of the top performing stocks of COVID, and it did a full round trip. Pretty much round trip the entire move and then some. This is 1 Manhattan West. Look at how grand the lobbies are. These massive ceiling heights here. Yeah, Jack CW Broadcom had a really good day today. Gapped and went. AVGO, ticker symbol, really, really good day. And across the street is 2 Manhattan West. Beautiful buildings. What are some more companies that were top performers during the pandemic that are now just complete dogs? I would say Teladoc, ticker symbol TDOC, was a pretty classic TML during the COVID pandemic, which is now round tripped and then some. And then Zoom Video, Zoom, ticker symbol ZM. Now, the problem with Zoom is it had about a decade of earnings and sales growth in 18 months, which it literally did, and that's why the stock went up 1,000%. But as you think about, what are you going to pay for this company? You're buying a stock not for the earnings it's already produced. You're buying the stock for the earnings it's going to produce in the future, right? That's why a lot of times we value these companies on metrics of, how many times earnings is it trading at? How many times sales? Do you think this company is valuable enough to command 50 times sales, 50 times earnings, right? And when you have a company hit that critical mass and have so many different competitors, well, the valuation metrics are going to change in a major way. What do you guys think of the lobby here? I just love the modern look. All right, let's go ahead and make this right by the B&H. This is where I buy pretty much all of my tech stuff, right here on the corner of 9th and 33rd Street. Yeah, Dyer's is very clean and modern, for sure. Oh, Jack CW, that's another one. DocuSign, DOCU. Jeff W277 says Wayfair, that's another one. Someone said Snapchat. I have a little bit of a personal vendetta against Snapchat. Now, this is all alleged, so nothing that I'm saying, I don't want to get in any trouble. But here's what I'll say.
do a deep dive into Snapchat's financials, and the whole thing seems to be just a corporate compensation scheme. Allegedly, right? I'm not going to accuse anybody of anything. But just, I think if you understand accounting, and yeah, just check it out. Snapchat, the whole thing seems to be just like a big corporate compensation, you know, juicing your comp package for the executives. Anyway, all right, we'll go ahead and head towards Madison Square Garden. There's another, I think this is Peloton's corporate headquarters in New York, right there on West 34th Street. Pam says I must be blocked. Maybe. Lance, what's going on? Good to see you. Look at how unique this shot is here. CW's talking about Papa John's. Well, Domino's is a big TML, and also Elf Beauty is trading very well too. Man, it is a windy night though. Hopefully how is the audio? How is the wind in the microphone tonight? Yeah, Brad, the building that's lit up in the rainbow colors, that's Madison Square Garden. And then if you look very, very closely at the spire of the Empire State Building, you'll see that big dragon there. And this is one of the main entrances to the brand new Moynihan Train Hall. Coming up this week, New York City is supposed to get hit with a massive heat wave. Some days later in the week, I think it's going to be over 100 degrees, which is crazy. I don't know. Baby Grinch says, are they going to remodel Madison Square Garden, or are they going to knock it down? I heard rumors that they wanted to do a big remodel on Madison Square Garden. I'm not too sure if that's going to go through or not, though. I think they should. I guess the problem is like figuring out scheduling logistics if you were to do a big rip and replace of Madison Square Garden, right? Because if you do, where is everybody gonna play? Yeah, I mean, I guess you can maybe go to the Barclays Center, but there's already so many teams playing at the Barclays Center already, right? So who plays at the Barclays Center? It's Brooklyn Nets. And do the Islanders play at Barclays Center now? I mean, Madison Square Garden is so iconic, but I do have to say it kind of sticks out like a sore thumb. It's not like the most aesthetically appealing place, to be honest. Particularly after just walking through Hudson Yards, which is like, you know, modern utopia.
Which street?
So I guess in conclusion, I wouldn't be opposed to it. I think it'd be great if they would build a brand new arena here, but how is that going to work out logistically? Oh yeah, Doc 7 says the Islanders have their own place now. UBS Arena, right? They used to play in the Nassau Coliseum. I've only been to once, which was many, many years ago. I was 17 and a half years old the first time I went to Nassau Coliseum, because that's when you were eligible to take the Nassau County Police test. And I went in there and I took the test, and I just remember there must have been thousands of people there waiting to take that test. And I don't even remember what I got on the test, honestly. Now we're coming up to the brand new Pin 2 project. I know, right? Well, to be honest, so Kate Masters says, as someone who is in New York City almost daily, it's so funny to see people stop and take pictures of everything at Penn Station. True, Penn Station, well, here's the thing. Penn Station was an absolute horror show, which I think you could probably agree. It was pretty much a living hell. It was like the seventh ring of hell down in Penn Station, but now it's actually quite nice. You know, and just the Penn District in general. I think Vernado has done a really good job. Made everything open, airy. Lots of different activities. This is that pickleball place. And the main entrance now to the Long Island Railroad is all modern and brand new. And if you go down inside the station, the ceiling heights must be like 15 feet. Before, they were probably like 9.5 foot height max. It was dark down there, disgusting. It was just a really, really horrible place. And now it's not. It's actually quite nice. And all of this is brand new too. All this landscaping, the seating outside. And I made this comment before. You know, most tourists, the first thing they see as it relates to New York City or Manhattan is Penn Station, right? Because you get off at JFK, you take the air train to Jamaica Station, and you take the Long Island Railroad from Jamaica to Penn, and you used to be greeted with just nonsense, honestly. And now it looks like a modern utopia almost. Looks really good. Hey, what's up, Dinesh? Good to see you. Now, this year has been absolutely packed with elections. And obviously in November, we're coming up on arguably the most important election globally for the US, right? The leader of the free world. So we had elections in India this year. We had elections in Mexico. They've elected their first female president, which the market had a not too favorable reaction. And then in November, we are going to elect a new president, or keep the same president, depending on the results, of the United States. And if you go back into my Substack, probably, I want to say the second article I've written this year, I go line item by line item of stock market performance during election years. And by and large, stock market returns are pretty good, really good actually, during presidential election years, but they're the best historically. The stock market has the best returns during presidential election years when the current president is up for re-election. So maybe we'll see some volatility around the event, right? I think there'll be some big event-driven trades to be had. You may even see the market drop a little bit. But then I think we'll have a very, very ferocious Santa Claus rally into the end of the year. All right, this is the main, I should say the new entrance to the LIRR. I was actually out on Long Island today. I was all over the island. I was in Massapequa. I went to Jones Beach, Long Beach. I was all over. Wait till they go down. Yeah, Jack CW for sure. For those of you who haven't seen it, we'll quickly take a peek down here. You'll see the expansive ceiling heights down here.
Please be careful while mounting the escalator. Please watch your step getting on and off.
Please keep your feet and personal items away from the sides of the escalator.
Please watch your step and face forward at all times. Please hold on to the handrail while riding the escalator.
Doesn't it look awesome down here compared to what it used to look like? So I've showed you guys this a million times, but if you look where it says track 18 and track 19, that's how high the ceilings were throughout the entire place, which is kind of hard to believe. So just imagine how claustrophobic the place looked right here. That's how low the ceilings were throughout the entire place, right here. And it was extremely dark. It was none of this modern paneling at all. This is all brand new. And then this loops around to the subway. You get the one train. I would take you on a total walking tour underground, but there's no internet here, unfortunately. Fed lowered rates by 2%, what do you think would happen to the economy? So if we started to cut rates right now, I think it would be a really big problem. I think it would be a really, really big problem. You'd probably have round 2 of runaway inflation, I think. That's for sure. Look, the market, I believe, the market has told us that we can operate just fine with the Fed funds rate at 5.25% to 5.5%. The problem is the increased, I think I should say the increased government spending into one of the most aggressive hiking cycles we've ever seen. Because the interest is accruing on the debt faster and faster and faster. I think every 100 days we add $1 trillion to the national debt. But equities and companies that are very profitable, the market has shown we could operate in this environment. I think the last decade was a statistical anomaly in the grand scheme of the US economy. It is not normal, right? So, and that's why I see a lot of these pundits on Fox News and CNN Business, you know, Barron's and, you know, all the main publications, CNBC, and they're like, you know, the anchor would be like, when are rates going to return to normal? You know, when are things going to go back to normal? You know, if I was being interviewed by one of these people, I'd be like, well, I think we need to look at this in a contextual sense. You know, technically we are returning to normal, right? The decade to get us out of the great financial crisis, the decade of ZIRP, zero interest rate policy, that actually was not normal. So I think humans are creatures of habit. We just get used to things. So everybody is so used to artificially suppressed rates. And I think people need to start to adjust to a new normal. You know, we don't need to be in this stimulative state all the time. And I would say we're getting back to normal. The only problem that I see, which potentially is not going to be a problem because we may be able to grow our way out of this. There was a good interview with Larry Fink, the CEO of BlackRock, the other day, talking about exactly this. I'll give you one quick look at the brand new entrance to Madison Square Garden. But with AI, we may be able to grow our way out of this mess, which is a blessing in and of itself. However, I still do believe our politicians should adjust their spending habits for the new environment we're in, I should say. And I also feel, and let me know what you guys think in the comments, let's say if inflation comes back down to the 2% target in a few months, which it's not, but let's just hypothetically say it is. You know, everybody on the street is saying and claiming and assuming that once we get back down to the 2% target, you know, let's just cut rates back down to zero again. My question would be why, right? Why is that the case, and why would we even want that? Now, last week I wrote an article, I published it on our Substack, and it's true that artificially suppressed interest rates creates a massive amount of economic growth, but it also creates a massive lopsided economy, and it creates this kind of two-tier society of extreme haves and extreme have-nots. So even though the CPI number, right, leading up to COVID was actually running below the 2% target, the Fed actually wanted more inflation. There was inflation in other areas, inflation in asset prices, in equities, and in real estate. The problem is, as I kind of outlined in that article, the vast majority of people who own assets, such as equities and real estate, are the top 10% of Americans. Everybody else is kind of, you know, you have employment, technically doing well, but you don't own the assets that are being inflated away. So it creates this massive wealth divide. I guess in a sense, I've read some opinion pieces in the Wall Street Journal which are quite good, where they're like, it almost creates a corporate socialism in effect, where if you think about who has access to all this cheap money or this liquidity, it's wealthy people, it's corporations, big organizations, and if the economy overheats and things crash and wipe out, well, then the government's there to bail them out. So it's essentially like a risk-free trade in a sense, which is where the moral hazard kind of came into effect with the financial crisis. But I don't know, I guess that was a long-winded answer. I mean, what do you think would happen to the economy if the Fed started to cut rates? I just don't think we need to. I think it'd be quite crazy if we did. So now we're walking down 7th Avenue. We're actually going to cut over and head back up a little bit. Lizzie Banks is here, Fun Feeds. What's up? Dario, good to see you. Jack CW says, Tom, I'm wondering your opinion on the CME Fed rate tool. Is it BS or not? Well, that's just futures. I mean, you're looking at futures. That's really all it is. That's the market's expectation of if the Fed will cut or not. If you're talking about that CME Group Fed Watch tool, that's essentially all it is. That's the market's expectations of monetary policy in the US. That's really all it is. which, by the way, has done a complete 180, which is wild. I remember in the winter we were talking about how many cuts this year, and now we're talking about maybe not having any rate cuts at all until maybe 2025 or 2026. Marius is Tom, but during this inflationary period, we are having, aren't the rich still getting a lot richer and the poor getting poorer? Yeah, I guess I would agree. Now, however, I would also agree with this statement, which is maybe a little bit contradictory. I think that opportunity and class mobility in America has never been easier to move up another rung. I think it's just about education. And there's been many studies done on this. I don't want to go down a big rabbit hole, but generally speaking, to sum it up, you are a product of your environment. Pam says, I guess Tom doesn't like bonds. We've talked about the debt market for the past 30 minutes. You know, we talked about rates. That's fixed income. Mortgage-backed securities. You know, that's all fixed income. Yeah, I forgot what I was saying, but yeah, let's head uptown. That's what we were talking about. Yeah, so, you know, it's proven that generally speaking, you are a product of your environment. So if so many great things are happening, but you don't have the wherewithal or the knowledge to take advantage of this stuff, you know, to go get those lucrative jobs, well, then it's not going to happen. It's also awareness, right? Chances are, if you grew up, you know, in a middle class or, you know, upper class household, what was the conversation in your household? It was probably about, okay, which college are you going to attend? What are your career prospects? What is, you know, the job opportunities that you're going to get? You know, talking about the markets. In a lot of neighborhoods and households, that is not, those conversations don't happen, like at all, right? So, I mean, just kind of like what we spoke about today, the S&P 500 hit a brand new all-time record high. So yeah, people who have very high gross exposure to equities, top 10% of Americans, are doing really, really well, are doing very, very well. This is another cool shot of Pen 2. Esmeralda says it also depends on the type of education. Not every degree will get you a decent job. You have to be smart about what you study. It's a really good point too. Really, really good point too. I believe life in general, if you're a trend follower, right, trying to identify major trends, I think you'll always do well. You know, this trend with enterprise software, cloud computing, and AI, you know, if you got a job over the last decade in tech, whether that would be a software engineer, maybe you were a product manager, a PM, maybe you were a salesperson, right? I was a salesperson. Chances are, I mean, unless there's something really wrong, you had a really good career. You had a good base salary. You know, you probably had a little bit of stock in the company that appreciated a significant amount, and you did really well. But you would have only known to go into those specific sectors and get those jobs if you were paying attention and kind of trend following, right? SaaS, software as a service, enterprise software, cloud computing, AI, right? Semiconductors. Think about all of the people who saw the big picture to say, wow, these are really, really, this is going to be a massive market. I'm going to go work for a Broadcom. I'm going to go work for an NVIDIA. I'm going to go work for a Salesforce. You know, I'm going to go work for a T-Mobile, right? Or, you know, name a ServiceNow. Chances are you've done really well. Or I'm going to go work for Meta, Netflix, All right, let's go to 34th Street and make a right.
Our whole dashboard. How
Yeah, Darius, is Sbarro still alive? I think it is. I think that place is still kicking. That Sbarro's has been there since I was a little kid. I don't know who would come to New York City and say, you know what, we're in New York for the first time, let's go to the Sbarro's right at Penn Station. But it seems like they go there. All right, this is now by the Macy's at Herald Square. Soon, before we know it, we're going to be doing the pre-Thanksgiving live stream. So the day before Thanksgiving, we do a really late night stream. It's usually around midnight. And we walk up and down 34th Street, kind of checking how they're setting up the stage for the parade. Yeah, Jeff says many of the companies I've mentioned are quite difficult to get a job at. Yeah, and I think that's probably very reminiscent of kind of that trend following thesis that we laid out, right? You know, how many soccer players want to grow up to play for Real Madrid? Pretty much everybody, right? You know, how many basketball players want to grow up and play for the Lakers? Because they're very reputable and successful organizations. It's the same thing in business, right? Now, I'd recommend this talk. I've recommended it multiple times, but arguably one of the greatest, I should say, growth stock investors of all time. His name is Ron Barron. He's from New York City. They have their corporate offices right here on Park Avenue. And I would really listen to their recent keynote address to investors. And they mentioned a few eye-opening stats. And Ron Barron was kind of giving a presentation, talking a little bit about Elon Musk, talking about Starlink, talking about Tesla. And he said it's harder to get a job at Tesla and SpaceX and Starlink. It's harder to get a job there than it is to get into, you know, a top Ivy League college or university, because the competition is so stiff. All of the best talent, all the best people, not only from the United States, but all over the world, want to go work there, right? Strength begets strength, and success begets success. So here's the Empire State Building. If you look closely, you can kind of see that dragon on there. And this is Macy's. Hey, NBA Elias, what's up? Good to see you. Thanks for joining us. Yards. Tom, any thoughts on more countries talking of joining BRICS? I guess I'll ask that question right back to the chat. Do you think that BRICS is a significant threat to the U.S.? Yes or no? If you had to, and there's no right or wrong answers, right? We don't know. But I'm actually curious what you guys think. I mean, I have my opinions. I voiced them before. But do you think that BRICS is a significant threat to the US? Yes or no in the chat. G5400 says no. Hey, JC is here. What's up, JC? BTC is trying to break back above that 50-day. Dario says I don't think so. Silvermine says no. Rotten says yes. More countries. Pam says no. Mark Francis says no. NBA Elias says no. TK Porsche says no. So pretty much everybody says no. Joel says no as well. That's my take. In addition, I would add a no there, in my view. Well, we also kind of have to weigh the other side of the argument. Now, maybe we just have some stiff confirmation bias in the chat, which I think we should always be open to, right? If everybody is saying no, well, maybe the most likely outcome is, yeah, it will be. Who knows? Nick says, yes, I feel BRICS can be a significant threat in the future, similar to the power of the EU. Beautiful shot of the Empire. SP is short term no, long term yes. Yeah, I guess we'll find out one day, but I don't think so, in my view. Now, what I do think is something to watch, and I mentioned it a few times throughout this broadcast, watch the most recent interview with Larry Fink, who is the CEO of BlackRock, talking about the need, right? And I'm kind of paraphrasing a little bit, but he's talking about the need of a new economic system just due to global debt levels. And I don't know, the way he was talking is it just came off a little bit, I'm trying not to use a super harsh term, just a little bit weird. We'll just use the term weird. I was gonna say like sociopathic, but I'll just use the term weird. It's like very weird language. Watch that interview and let me know what you think. And then maybe we'll discuss it together. This is the Empire State Building, everybody. We're pretty much directly outside of it. This is the corner of 34th Street and 5th Avenue. Now, something I think about often, and this is how it was explained to me by somebody that's very, very smart and I respect a lot. He says there's always going to be something to worry about, right? Geopolitically speaking. Always, in perpetuity, forever. there's always going to be something in theory that is going to keep you out of the market. Just go back throughout history. And one thing he actually made me do, like a little task, is print out, and you guys could do this too, and I think it's a really, really good exercise, and it's pretty fun to do as well. If you go to a website like tradingview.com, go to a monthly time frame of the S&P 500 and zoom all the way out. And then save that as a PDF and print it, physically just print it out. And what you could do is, now that you have this big chart of the S&P 500, what you should now do is go back throughout history, and anytime you see, a major movement either up or down in the market, go research what major geopolitical historic event happened. And the moral of the story is, over time, the more you zoom out, right? It's not to say don't be oblivious and don't risk manage, but it's just a general point that if you look back throughout American history, even if you just want to go from the 1960s onward, there was a lot of scary stuff that happened. Like a lot of scary stuff, okay? 9/11, COVID pandemic, the invasion of Iraq, terrorist attacks, wars, just horrible, horrible stuff. And the world goes on. Things continue, humans progress, right? So you have little blips along the way. The Cold War, right? We thought we were going to be nuked by Russia and blown off the face of the earth, right? So I guess the moral of the story is, try to really, really focus on the fundamentals, of the tech or new products and services. Focus on the earnings. If you focus too much, right? Now, I'm not saying don't focus at all, but if you focus too much on the global macro of it all, and if you really, really go down a global macro rabbit hole, I would be surprised if you even get out of bed in the morning, because the world is a very, very scary place. I don't think anybody's denying that. And wars happen, genocides happen, terrorist attacks, just atrocities, financial crisis. But at the end of the day, if you buy good companies with good earnings, the world moves on, and I believe, in my opinion, the world is improving. The world is improving, and it gets better with each passing year, in my view. So it's a cool exercise, and it actually looks like a nice kind of little art piece that you could hang up on your wall. So go ahead, print out a monthly chart of the S&P 500 and just mark it up. Mark up the chart. Where was Vietnam? When was the invasion of Iraq? When was 9/11? Right on the chart, and mark it up. Hey, Trade Brigade, what's up? Trade Brigade, how you feeling today after the 30th record high this year for the S&P 500? What are we thinking? If you guys are enjoying the stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams practically every day, starting at 8:45. Nice. Trade Brigade's having caught a piece of this morning. Is feeling very good. Love that. 10 out of 10. Marius says, it's true, Tom. There is always something a person can worry about, for sure. And it really keeps you out of a lot of opportunities. And I kind of learned this the hard way. I told this story a million times, but I think it's a good story. It'll help people. Number one, you got to get around. If you want to be in the investment business, or just in general, if you want to have a really lucrative career in anything you do, number one, get around the best people in those industries. Just get around the best people in those industries. Have a chat with them. And in general, what you'll find is the best and top performing individuals in every industry generally speaking, they're optimists. They're not kind of doom and gloom, fear porn people. And oftentimes, a lot of these doom and gloom global macro people, they confuse their smarts in a sense. What's the old saying on the street? You know, bears sound smart. You know, you could do, you know, a million kick flips and jumping jacks about debt to GDP, and this country is going to invade this one, and BRICS is going to take over this, and the US dollar is going to go to zero, and we're going to default, and this and that and that. But if you focus just on the earnings, right? Take it company by company. If company XYZ made $10 a share last year, and they're on track to make $40 a share this year, the stock is going to go up, generally speaking, right? So focus on the earnings growth, focus on the revenue growth, and don't get so wrapped up with the doom and the gloom and the fear. All right, this is the 6 train entrance. This side of the street's downtown. The other side of the street is uptown. And you can see the MetLife building and Grand Central Station in the distance. Fun feeds is there's doom and gloom all over social media, for sure. Well, that's really what drives clicks, right? You know, if there's this, you know, analyst out there that has this big bear thesis, and he's like, I uncovered and I did the detective work, and you know, it sounds very persuasive. And I think that's another thing. Try to pay close attention to your cognitive biases and cognitive dissonance. And I always fall for it too. I need to work on that. But generally speaking, if you hear a bullish argument or a bearish argument, it's going to sound very persuasive to you. It's going to sound extremely persuasive. Like, how many of you have ever watched a documentary in your life? Think about the last documentary you've ever watched, and chances are you walked away from that like, oh my God, that was the most life-changing thing ever. But if you kind of take a 1,000-foot view of that documentary, you're like, it's persuasion. Of course it sounds convincing, right? You can watch a documentary on the same exact topic with a different skew, and it's going to sound just as convincing. So to have that kind of balanced bias to say, look, there's good arguments on both sides, but the world's not going to end. And if the world does end and we all die and we go into a global depression, the bears are not going to be in a better situation than me. And again, this isn't to say that you should be a perma-bull all the time. That's not what I'm saying. It's just a longer term view of a lot of people miss out on opportunities, not necessarily only in the stock market, but in their career. Because they're like, oh, I don't know if I should apply to this job because I think we're going to go into a recession, and the job that I really want to get, there may be cuts in that department, so I'm not going to apply. And then 50 years later, you're at the same desk job, you know, making the same amount that you were because you never wanted to take the risk, right? It's never going to be the right time. It's never going to be the opportune moment. There's never going to be, you know, the perfect economy for it. There's always going to be uncertainty. You just got to do it. You just got to do it. You got to force yourself to move forward constantly and get comfortable with the uncertainty. That's really all that there can be said. Just be comfortable with the uncertainty and accept the worst case scenario always. And if you come to terms with that, I think you'll be unstoppable. All right, let's go take one pass through Koreatown. And by the way, that piece of advice, I wish at times I would take my own advice. This is advice that I was given by some very, very smart and successful people, and it's hard to take it because it's difficult to put yourself in uncomfortable situations. So, all right, let's go to Koreatown because I actually may get something to eat. I'm starving. Yeah, NBA Lies, the 2008 financial crisis documentaries implied that Wall Street was done forever, for sure. I still think to this day that the 08 financial crisis created such post-traumatic stress disorder for people. And I'm not saying that in a mean way, by the way. Like, I'm not, trying to make a joke about PTSD. It's a very serious thing, I understand. I'm just trying to make a point. I'm not trying to, mock. I think you understand what I'm saying. But it's created huge PTSD. And, just watch any YouTube video, right? Any YouTube video on any channel, and you'll see this is going to be worse than 2008. This is going to be the next 2008. It's going to be worse. Or these signs are going to lead to the next 08. Or here's 5 reasons why the market's going to go down more than 08. It's always that, it's essentially, it's conditioned people, if I could summarize it, it's conditioned people to say that if the market starts to go down, it has to be another 2008 financial crisis. But if you look at the data, right, a normal pullback in the market, which is just a run-of-the-mill normal correction, could be upwards of 15% in the index. And that's considered normal in a longer bull trend. But I feel as if any time the S&P or any time the NASDAQ or the Dow is down like 5%, people automatically pull the fire alarm, and it's like, this is the big one. All hell's gonna break loose. Things are gonna go down 90%. Pack it up, America's over. It's like, chill out for a second, okay? Just chill. Bear markets happen. It's been happening since the beginning in the creation of the market. Stocks go up, stocks go down, and that's the show. All right, these are 2 of my favorite restaurants in New York. This one is called Her Name is Han, and they're owned by the same owner. And also, how many times, I feel like I'm ranting a lot tonight, which I apologize for, but how many times have you seen these articles on like MSN.com, Bloomberg, or CNBC that says, analyst that predicted the 2008 financial crisis now has a new prediction and he thinks the world's going to end again? It's like, yeah, dude, people are pessimists. But the good thing about the investment business, right, is that you don't need to be right all the time, right? Even perma bears could make an absolute fortune, could make absolute billions. People who were, short subprime, going into the financial crisis, they made billions of dollars. And they've been consistently negative since the bottom of the market, but they're still ultra wealthy, right? Because they risk manage, and you only need to be right once. And I think that's what's so great about America, not only in the stock market, but in anything you do. You only really need to have a big payday, or you only need to be right once, right? You work hard, you study for that interview, you get the job, boom, you make it $300,000 a year. You only need to be right once, right? Or you're working really hard on a deal, and you sell a really high ticket item, boom, you make 800 grand. It only takes one opportunity. It only takes one deal. It only takes one promotion to change your life in America. And that's what's so great about it. All right, let's zoom in on this trend. 2008, thought they were lied to. Many people I know saw the value of their portfolio fall. To an extent, they were lied to an extent, and that's why we kind of have this conversation about moral hazard, right? Who caused the great financial crisis? Well, you could argue it was the Fed, but it was also nefarious activity and unethical activity by bankers, right? Most people, maybe I won't say most, I don't want to overgeneralize, but there was a lot of people, right, that were sold something, they sold a financial product that they didn't fully understand. there were people, and I don't think you can debate this, there were 100% people that were sold a mortgage by a mortgage banker or broker that they didn't understand these adjustable rates, they didn't understand what they were getting themselves into, and they didn't understand these balloon payments at all. So it was a big problem in 08. And I think it's a big disservice. And the problem is the taxpayers, me and you, bailed out all these bankers, right? So there were a lot of people who thought that they were making a good investment by buying a house, and they were never told about any of these adjustable rates or balloon payments. So, all right, Koreatown. We're gonna walk through pretty much all the way back towards really where we were by Vernado. Now, if you're in Koreatown, this is another good spot. It's on the second floor. It's called Sorimara. It's a Korean-style kind of malatang place, which is actually not Korean food. It's Chinese food, but it's a Korean brand. It's kind of like a Korean twist on the malatang, and it's quite good. Nick's was told you could refinance in 2 years. Yeah, I think that's also very, very disingenuous. I think that's very bad advice, in my opinion. Like, how many times have you ever heard like a real estate agent say, "Oh, you know, just you know, what is the corny saying? Marry the home, date the rate," something like that. That is like the worst advice I've ever heard in my life. Nobody could predict where interest rates are. There's no guarantee that interest rates are going to go down ever. So by saying, "Oh, you know, rates are going to go down, so get an adjustable rate mortgage, you know, don't worry about it." You know, oftentimes ARMs will have these teaser kind of rates. Nobody knows what interest rates are going to do. So yeah, nothing is for certain. Nothing is for certain, okay? Particularly, you know, if the greatest economists that work at Bloomberg, Goldman Sachs, BNP Paribas, Barclays can't predict where interest rates are going to go, you know, your neighborhood realtor can't do it, okay? And this is coming from a real estate agent, okay? Me. All right, let's walk past, what's it called? H-Mart. I was reading an article in the New York Post. A lot of these outdoor dining sheds, if not all of them, are probably gonna have to come down by July. SBK Pilot says interest rates have to go up. Who's buying all this paper coming from the Treasury? Save the Clock Tower. This is the people that are doing naked short selling know exactly what is going to happen, narrator. Could you elaborate on that? What do you mean?
Exactly.
Yeah, Lances you don't see that much. Well, it's not as densely populated, Miami, Florida. And I think they have better and newer infrastructure. The problem with New York is the infrastructure is quite old, but, you know, not to downplay the garbage problem, because it is a big problem. I mean, look at all the mounds of garbage piled up. But, you know, I think that's something the city is going to need to take on and figure out, for sure. You know, for a Monday night, it's actually pretty active here. All right, let's head up towards Adele's, famous. Because if the line is short, maybe I'll get that for dinner. I haven't had it in probably 2 years. Maybe more than 2 years, actually. Trade Brigades. This looks really active. Was dead on my walk through Capitol just 30 minutes ago. Yeah, summer in New York, lots of tourist activity. SBK pilots, as the consumer is still spending. Aren't we going to get we're going to get a spending data this week, aren't we? We're going to get housing starts data, we're going to get existing home sales, but I think we're going to get spending data, aren't we? Ah, retail sales, that's it, Trade Brigade. Thank you. Yeah, tomorrow at 8:30, we're gonna get retail sales. Minus autos too. Yeah, Harry Connors is, and you're in Adele's junk. No, for sure. Now, I'll take it a step further. I haven't had halal food in probably about a year. And that's probably top 5 favorite food, but I can't eat it all the time because it's not the healthiest. Yeah, Austin City Limits is a really good day with the markets, for sure. 30th consecutive, or 30th new all-time high for the S&P. And crude oil is actually trying to creep its way back into the 80s. I think we are trading at $79 a barrel for crude. There's Herald Square Macy's. Nobody's here. Do you eat South American food? Could you give me an example? What's an example you would say? If you give me an example, I can tell you yes or no. Yeah, Brad's Brains' Kava had a nice day today as well. We're approaching a Livermore number, 100. Yeah, we'll probably test that for sure. I think the NASDAQ 100 will probably go to 20,000. Ah, someone says Venezuelan food, arepas. Then yes, I have had that. There's a good place in Miami on Normandy Isles that sells that type of stuff. Now, our arepas, like they're almost like pancake consistency, and then it's stuffed with really whatever kind of ingredients you want. If that's what it is, then yeah, I've actually had it many times. Connor says, hey Tom, did you see the dragon on the Empire State Building? We were trying to look at it a while ago, but it doesn't really come out well on the camera. I think it's too dark. But if you look at some of the photos online, it looks pretty cool, but
So pretty.
I think it's too far away to see with the camera. Lizzie Banks says, Tom, I was reading that Wells Fargo is losing money with the Built credit card. Seems like they are always in the news for making bad decisions. I'm not too sure what the Built credit card is. But Lizzie, you know what I was reading? Apple is turning down their Apple Pay buy now, pay later. Did anybody see that? Now, has anybody here used that buy now, pay later thing? Apparently Apple is turning it down, or turning down that section of the business. NBA Elias, Tom, many analysts say that multiple SaaS companies are in jeopardy because of AI. I think there's going to be mass consolidation. That's really what I think. And this is kind of coming from my experience selling some of these softwares, like software as a service. It's come to a point where there's a SaaS for everything. There's a specific software for every little thing. And many corporations are trying to consolidate their vendors. If you're a big Fortune 500 company, chances are you actually will hire a separate company just to deal with all these different vendors. And oftentimes it's called a TEM, is the acronym, a telecom expense manager, and they're also, kind of the Salesforce administrator. They'll do the Workday. So I think if there could be an AI that consolidates and does everything, I think you'll see some very niche companies kind of be absorbed potentially. You're already really seeing that consolidation, particularly in cybersecurity. You're having these more niche style cyber firms being acquired by some of the bigger players. So I would say generally, yeah. I think over the long term, a lot of banking, like pure play, investment banking jobs will probably be in jeopardy of, getting replaced by AI, I would say. There should be a study done about, because we all know the stigma that investment bankers work a lot of hours. But, I've had friends and still have friends in IB. And when we were young, they were an analyst and they would spend so much time, meticulously putting together a deck and fixing around the different logos and, green graph, red graph, making it look all pretty. And then the client doesn't even fucking read it. So you put this kid, the guy or girl, through so much stress, right? Mixing around the graphs, making the logos look pretty, keeping the kid up to 1, 2 o'clock in the morning, and then when it comes time to present, hold on, I gotta let these guys go. I don't want to walk right in path with the music. I can't stand loud music. I think some things like that, we could prioritize the work we do, if that makes sense. And I'm sure it doesn't necessarily just have to be investment banking. I'm sure many people who are watching this broadcast, right, have had some job where they were doing some, ridiculous task, and the client's not even going to see it. That happens a lot in consulting too. Or the client just glazes over it. that happened to me a lot too, as when I would go on these big meetings and these big pitches to try to win business from, away from a competitor. And most of the meetings, by the way, we distribute the decks, and then the whole meeting is just a conversation between everybody. And nobody even looks at the damn deck. And I was up so late, going over it. Now, it's not to say that you shouldn't have it. You should. You should put your effort into it and you should do it. But do you really need 150 pages of nonsense and fluff? I don't think so. I don't think so, to be honest. Here we are at Bryant Park. Lark Barks is Me Too. Tom, and especially that kind of music. Yeah, for sure. I don't know, I just feel like things can get so loud and it's like overwhelming your senses. No way, nobody shares. I saw a white Cybertruck in New York. I saw a white Cybertruck in Brickell when I was down there last. C Musics would love to see the Bank of America Tower if you're ever near there. I work for the company. You have it. This is Bank of America Tower, right on the corner of 42nd Street and Avenue of the Americas. This is Bank of America's New York City headquarters. Perfect timing, I guess. What a lot of people, when they think about New York City, when they think about finance, they think of Wall Street in Lower Manhattan. But pretty much zero of the major investment banks are on the physical street of Wall Street. They're all pretty much in Midtown Manhattan, in and around Times Square North, and on Park Avenue. Now, it's true you have Goldman Sachs in Lower Manhattan, but that's 200 West Street, just outside of the World Trade Center. But if you really want to think about, finance and Wall Street, you should think Grand Central Station, Park Avenue, up till about 57th Street. That's where all the major banks, hedge funds, a lot of family offices over there. Bank of America Tower. You have the subway in the bank and a pretty good view of the Empire State Building. Also, One Vanderbilt. One Vanderbilt houses TD, if you're interested in the hedge fund business, I would suggest studying Julian Robertson, who is the founder of hedge funds. Unfortunately, he passed away, but all of the people who worked under Julian Robertson pretty much branched off to start their own hedge funds, and those are called the Tiger Cubs. And I'd say the most notable Tiger Cub is run by Chase Coleman. And Tiger Global is on 57th Street, right across the street from the Amman, New York. This guy's pretty good too. Speaking of hedge funds, this building right here, 1166 Avenue of the Americas, this is D.E. Shaw, or David E. Shaw & Co. I always tell this story, but we do have some new people here. But the story of how Amazon was created is Jeff Bezos graduated from college and he moved to New York City. And he went to work at a hedge fund. And at the time, that's when David Shaw started D.E. Shaw. So he worked as an analyst at the hedge fund here, and he came up with the idea of Amazon. And he's like, you know what, let me run this idea by my boss. So he knocked on the door. Jeff Bezos knocked on David Shaw's door and said, David, I got an idea. You know, come take a walk with me in Central Park and let me know what you think. He pitched him on Amazon. And David Shaw said, you know, Jeff, this sounds like a really good idea for somebody who doesn't already have a really good job. Because back then, you know, Jeff Bezos was probably making a few $100,000, you know, way back then at the hedge fund. He would probably have gone on and made multiple millions of dollars working there. And so Jeff Bezos thought about it. And he's like, you know what? I'm going to quit and I'm going to start Amazon. And that's how it came about. And now D.E. Shaw is right here. I used to work in this building, not for D.E. Shaw, but this is the Marsh McLennan building at 1166 Avenue of the Americas. If you guys are enjoying the live stream so far tonight, feel free to leave a like the video and click the subscribe button if you're new. Every day starting at 8:45. We're now going to pass the News Corporation building, headed up towards Radio City and Rockefeller Center. Hey, 50 or 30 Rock. Road rage. Oh, empanadas, KT, South American food. And I love empanadas. Really, really good. There's this good spot. If anybody is visiting Miami, yeah, we're definitely not going to go to Adele's tonight. This is probably like a 3-hour plus long line. No shot. 0% chance. But there's this good spot in Miami. It's called Chicato Coffee and Bakery. Chiquito, I forget. It's on 72nd Street. They have really good empanadas. I get the beef and olive.
No.
Well, look at this line, man. This guy all the way at the end is a trooper. Oh, Maron. Well, I think we'll go ahead and blow this stream out. I want to thank everybody for joining tonight. Hopefully you all had a wonderful start to the week. I think this was a fun stream. I really enjoyed walking around the Hudson Yards. It's a beautiful neighborhood and we really don't get to go there as often as I'd like. So hopefully everybody enjoyed that. If you want to come join us tomorrow, we'll be on at 8:45 p.m. Eastern Time sharp. We'll be breaking down US retail sales. So if you enjoyed the stream, feel free to leave a like on the video. Click the subscribe button if you're new. And we will see all of you right back here tomorrow night, Tuesday, live from New York City. So thank you everybody for joining. Merry sunshine after rain. Out and about. All of our moderators, Trade Brigade, NBA Elias. Always a bull market somewhere. You just need to know where to look. See you guys very, very soon. Take care.